Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello friends, checking in on natural gas, starting with the daily time frame here. So we have rolled over to the May contracts, and we are looking at the bulls still in control, very clearly forming higher lows and higher highs, and we are going to be bullish on the daily time frame as long as that trend remains intact. And the bulls really do have a good amount of wiggle room. If you were a bull and you wanted to be more protective of your gains, because at this point it would require a break of 3011 and 2986 to break this higher low pattern, then I would be using this inside bar on Friday's candlestick. So the range of Thursday, pretty large with the inventory report reaction, and we've got the range of Friday fitting within that. And I would use that range of Friday on Monday. If we saw a break of 3163 and I wanted to lock in profit, that would be my exit point. And if we saw a bull break of this little double top at make that 3237 and 3242, break those levels, and obviously the bulls continue to the upside. So a nice inside bar to be an indication to lock in those short-term gains if we get a bear break. Or if you want to go longer and give it more wiggle room, we are looking down at the $3 psychological support level. And if we put a line there, we can see that we have bounced off of that on this consolidation. So resistance from here, if the bulls can break 3242, the next resistance we're looking at on the daily time frame is 3342. And that is just a high from a day back in the end of January. So the bulls have done a really nice job bouncing here. Just cautious, as I keep pointing out on these weekly time frames, because we are seeing a shift in the trend, so to speak, where we did see a significant pullback, and I do anticipate a lower high to form on the weekly time frame, and I do anticipate the bulls to run out of steam here fairly soon. So keeping an eye on this support way down here to keep a key level down, I would put it 259 as we have bounced off that level on these three major consolidations. But considering where we are at this point, seeing 4 of the last 5 weeks nice and green, like I said, will be looking for a potential bearish candlestick on the weekly time frame to indicate a heads up that some consolidation is coming. And that is just because of the overall big move to the downside that we saw to start 2017. So UNG on the daily time frame, nice, slow and steady, higher lows and higher highs, maintaining those levels. The new support I'm watching is 746 and then down to 741. So those are the two support levels I'd be keeping an eye on. And in terms of resistance, we have a double top at 767, and then we're looking up at 772. And we look at the weekly time frame, and it's a bearish doji. So this is a different candlestick than natural gas, and that is because the times of the closes are different. UNG obviously closing at 4 p.m. Eastern, and natural gas trading longer than that. But keeping an eye on this bearish reversal candlestick on the weekly time frame, I'm going to be looking for these signals on natural gas as well this coming week. And if we see a red week this coming week, we will confirm that we are going to begin pulling back, and the key support will be $7, the low of the last consolidation on this weekly time frame. So the bulls are seeing the bullish MACD cross close to coming in here. A bullish TCG cross of these exponential moving averages are close, but this doji of indecision after such a strong move to the upside over the past month has us cautious bullish. And again, that's not the candlestick we're seeing on the natural gas weekly time frame, but the daily time frame is showing indecision as well. So we're going to utilize the range of Friday this coming Monday and see which direction breaks to give us that short-term direction to start next week. So that's my opinion. Bulls still in control. No reason to sell right now if you are bullish. Just cautious and anticipating that things are going to shift potentially this week, and we'll be keeping an eye out for it. I appreciate you watching, and I hope you have a great rest of your weekend, and we'll see you soon.